Hello everyone. Welcome to another session of Short Term Metrics, the one and only channel to bring you here with the true informatives that every trader need in order to become professional. We are quite new here. It's been like almost 2 weeks. We try to provide insightful videos and help you guys achieve whatever you are looking to achieve in this word called trading, um, or you can even look for investing strategies here and everything about the financial markets, what affects them, how to read price action, and in summarize everything. So make sure you guys join the channel, subscribe, hit the like button, comment down below what you guys would like to see. And in the meantime, we'll go into today's topic, which will be a series. It will be with multiple videos over the course of times. We will talk about Japanese candlesticks patterns, and how we can apply it to the chart and what to look for, how to use and how to apply it to the chart and into our trading strategies. Okay, so let's hit it off and start with why candlesticks are important to our trading analysis. As you guys can see here, we have a lot of candles, something that looking like a candle, which is this is why we call it candles. Everything you look here, everything in all these colors, every move you see in the chart is due to a candlestick. So this is what we will talk about today. This is what we will learn today. We will apply it to the charts, and I want to begin with talking about why candlesticks are important to our trading analysis. So candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. In this case, we look at the Aussie against the dollar pair, but let's not think about it because every chart has candlesticks. So by looking at a candlestick, we can get valuable information about the open, the high, the low, and the close of price, which will give us an idea about the price movement. As you can see, I will elaborate in a second, but we have, of course, the high of the candle, we have the low of a candle, we have the open of a candle, and we have the close of the candle. So this is the most basic information we get from Japanese candlesticks in trading. Candlesticks are flexible. They can be used alone or in a combination with technical analysis tools such as moving averages and momentum oscillators. They can be used also with methods such as the Dow theory or the Elliott wave theory. The human behavior in relation to money is always dominated by fear, greed, and hope. Remember this: fear, greed, hope. Perfect. Candlesticks analysis will help you to understand these changing psychological factors by showing us how buyers and sellers interact with each other. Perfect. It's also important to notice, guys, and note that candlesticks provide more valuable information than bar chart. Using them is a win-win situation because you can get all the trading signals that bar chart generate with the added clarity and additional signals generated by candlesticks. Um, so basically, candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day, and they can move the market whenever they want to, either up or down. Perfect. They can take your money easily if you don't understand the game, and this is why I will continue and post educational videos about the market makers, about those big guys that take our liquidity as retail traders. Using candlesticks patterns will help us understand what the big boys are doing and will show us when to enter, when to exit, and when to stay away from the market. Okay, so let's begin. Let's take this here and let's show you what I got. So, what is a candlestick? Of course, we see it here, but it will be much more visual and easier here because it is already written. Japanese candlesticks are formed using the open, as as it is mentioned here, the high, the low, and the close. Pay attention. Open, high, low, close. This is a red candlestick, a bearish, and this is a white one, a bullish candlestick, which is often used as green. Colors really don't matter here. It's the structure that matters, okay? Okay, so pay attention to this. If the close is above the open, okay, we can say that the candlestick is bullish, meaning going up. Perfect. Which means that the market is rising in this period of time, of course. Bullish candlesticks are always displayed as white candlesticks in this case, okay? It's important. It's in this case. You can use any color you want. As you can see, I use white, I use green. They all represent, I use blue. They all represent the bullish candlesticks, but we will talk about that later on today. Okay, so, okay, the most important is the open price and the close price, okay? If the close, let's use this. If the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this session. Bearish candlesticks are always displayed as black, red, white, whatever. This is what I want you to remember. It has no importance of a color. Of course, you can find different colors used to differentiate between bullish and bearish candlesticks. The filled part of the candlestick, in this case we have the body, the filled one, is called a body. The thin lines poking above and below, as you can see, is are called shadows or tails. Everyone can call it differently. As you can see, we are referring to this line right here. Let's take it back a notch so we have a clean one. Perfect. Okay. The top of the upper shadow is the high, as you can see. And the low of the upper shadow is the low. Perfect. Okay. So let's continue. Now that we have this one, let's take it aside and continue with our second representation. We are talking about long versus shorts. Okay, so how do we do this? What does it mean? Let me clean this up. Perfect. Okay, so let's continue. Long bodies, okay, refer to strong buying or selling pressure, meaning if you see a candle like this or a candle like this pointing downwards, and how do you know that? Refer back to our what is a candlestick. When we know that the thin lines poking above and below the body are called shadows, the top of the upper shadow is the high, the bottom of the lower shadow is the low. If the close is below the open, we can say if the close, again, the close is below the open, which is here, we can say that the candlestick is bearish. And the other way around, if the open is below the close, then you can say that the candlestick is bullish. And this indicates a rising session. Okay, so what's the story here? Candlesticks have different body sizes. We have long body size and we have a short body size, as you can see both scenarios. Long bodies referring to strong buying or selling pressure. If there is a candlestick in which the close is above the open with long body, this indicates that buyers are strong and they are looking and taking control of the market during this period of time. Conversely, if there is a bearish candlestick in which the open is above the close, as I told you, With a long body, this means that the selling pressure controls the market during this chosen time frame. Short and small bodies indicate a little buying or selling activity. Let's continue. Now we'll talk about long shadows. Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and close. Okay. If a candlestick has a longer upper shadow, meaning a longer tail to the upside, and short lower shadow, as you can see in this candlestick right here, okay? This means that buyers flexed their muscles and bid price higher. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. As you can see, the candle has opened here, but they have went up all the way just to bring it back down and close the candle right above the open, which still indicates a bullish candlesticks, but with an activity of selling pressure within that candle. Okay? If a Japanese candlestick has a longer lower shadow and short upper shadow, this means that sellers flashed their washboard abs and forced price lower. But for one reason or another, buyer came in and drove price back up to end the session near its open price. As you can see, the open price, I'm sorry, the open price, and then you can see sellers have dominated, but then buyers kicked in and closed right below the open price. Okay, so um, this is for now. Repeat it, search for it in the charts, search for candlesticks. Um, Understand that shadow. Here is an upper shadow. Here is a lower shadow. Here is the open. Here is the close of a candle. Just go over it and go over this video again and wait for part 2 where we will talk about candlestick patterns, how to identify, how to use, and how to trade using these. Okay, so I hope you had a good time. Hope you understood the value that we bring in this one. Guys, make sure like, subscribe, understand to use your own time efficiently, and comment down below what you need us to add, whether if it's in this specific tutorial or just another subject you guys would like to try out. So thanks for watching, guys. Peace.